This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices gained on Monday with U.S. fuel demand, tight supply and a slightly weaker U.S. dollar supporting the market, as Shanghai prepares to reopen after a 2-month lockdown that fueled worries about a sharp slowdown in growth. Brent crude futures rose $1.12 or 1% to $113.67 a barrel at 0912 GMT, while U.S. West Texas Intermediate WTI crude futures climbed 96 cents, or 0.9%, to $111.24 a barrel, adding to last week's small gains for both contracts. Oil prices are supported as gasoline markets remain tight amid solid demand heading into the peak U.S. driving season, said SPI Asset Management Managing Partner Stephen Innes.
The energy security crisis since Russia's invasion of Ukraine must not lead to a deeper dependence on fossil fuels, International Energy, IEA, Chief Fatih Birol said on Monday. The right investments, especially in renewable energy and nuclear power, mean the world need not choose between energy shortages and accelerated climate change due to fossil fuel emissions, Birol said at the World Economic Forum, WEF. We need fossil fuels in the short term, but let's not lock in our future by using the current situation as an excuse to justify some of the investments being done. Time-wise it doesn't work and morally in my view it doesn't work as well, Birol told delegates in Davos, Switzerland.
Moving on to the top news in the energy sector.
India on Saturday announced a series of changes to the tax structure levied on crucial commodities in a bid to insulate consumers from rising prices amid high inflation. Finance Minister Nirmala Sitharaman announced a cut in excise duty on petrol by 8 rupees ($0.1028) per litre, and 6 rupees per litre on diesel. The new tax regime on petrol and diesel could result in a loss of about 1 trillion Indian rupees to the government in annual revenue due to the lower collection, she said in a series of tweets. The government also removed the import duty on anthracite, PCI coal and coking coal in a bid to reduce raw material costs for local market demand.
Russia's Gazprom on Saturday halted gas exports to neighboring Finland, in the latest escalation of an energy payments dispute with Western nations. Gazprom Export has demanded that European countries pay for Russian gas supplies in rubles because of sanctions imposed over Moscow's invasion of Ukraine, but Finland refuses to do so. The move by Gazprom comes at the same time as Finland is applying to join the NATO military alliance, a decision spurred by Russia's invasion of Ukraine. Next, we have the top news in metal markets. Chile's government, which has pledged to establish a state lithium firm to develop the ultralight battery metal, hopes to establish a model for the company by the end of the year, Mining Minister Marcela Hernando told local paper La Tercera on Sunday. The South American country is the world's second-largest producer of lithium, a key component for electric car batteries, with its domestic industry currently dominated by two private firms Albemarle Corp and SQM. However, the government of new leftist President Gabriel Boric, like administrations in Mexico and Argentina, is keen to get more closely involved in the booming market for lithium, which has seen prices soar over the last year.
Benchmark iron ore futures in China surged some 7% on Monday, tracking their biggest daily jump in 2.5 months, after India increased export duties on some commodities to rein in broadening inflationary pressures. Asia's third-largest economy raised export duties for iron ore and steel intermediates, with new iron ores and concentrates tariffs increased to 50% from 30% and duties on pellets hiked to 45% from 0%. The government also removed import tariffs for coking coal and coke. India is one of the major non-mainstream iron ore suppliers for China, accounting for nearly 3% of China's total imports in 2021.
We will now look at the top news in the agricultural sector.
U.S. grains futures edged higher on Monday, lifted by a weaker dollar, gains in crude oil and as adverse weather conditions threatened production in key producing countries. The most active wheat contract on the Chicago Board of Trade, CBOT, was up 0.9% at $10.79 1/4 a bushel, as of 0343 GMT, after falling 0.74% last week. Wheat supplies for exports are only shrinking because of the Ukraine war, exports ban and deteriorating weather conditions, said a Mumbai-based trader with a global trading house. French and US crop numbers are now getting revised downward, the trader said, adding all these factors support a prolonged rally in wheat.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.